For better or for worse, venture capitalists are key contributors to the growth of the crypto industry. The only problem is they don't seem to be paying much attention. In fact, the absence of VC investment could be a part of the reason why the crypto market has sometimes felt a bit meh recently. So then, what the heck is going on? Well, thankfully, a recent report sheds some light on the answer. So today, we'll break this report down for you in simple terms and tell you where crypto could be headed next. Let's dig in. So, the report we'll be breaking down for you today is titled Crypto and Blockchain Venture Capital for Q3 2024. It comes from Galaxy, a leading blockchain company with a focus on VCs. We'll leave a link to the full report for you down in the description, but we'll be giving you the juiciest bits here in this video. Now, the report starts by analysing the number of deals made between VCs and crypto startups and the amount of capital being invested. The report's authors highlight that there was $2.4 billion being invested by VCs in Q3, which is actually a 20% drop from Q2. There were also 478 deals made, a drop of 17%. When you think about it though, this decline does make sense. After all, BTC hit its all-time high in March, but it's been chopping sideways until recently. Not to mention that most of crypto's activity lately has been in meme coins. It's easy to see why these mixed messages could leave VCs feeling a bit hesitant. This is likely why, despite Bitcoin's almighty rally earlier this year, venture capital interest in crypto is about as low as it was in 2023. What's shocking to see is just how much the correlation between BTC's price and the amount of VC investment into crypto startups has eroded. If you look at the chart provided, you can clearly see this correlation. As BTC starts to move more to the upside, more and more VCs begin to catch on and start throwing their megabucks at the crypto industry. You'll also notice that VC money tends to stick around a little while after Bitcoin's all-time high, and that's because they'll have rotated this capital into altcoins, like the rest of us. However, ever since BTC's price pivoted to the upside in January last year, VCs don't seem to have noticed. There was a small uptick when BTC hit its peak in March, but frankly, it's barely worth noticing. This is kind of strange when you think about what happened in 2023 and in 2024. I mean, sure, last year USDC scared us all for a second, and there were more hacks and exploits than we could shake a stick at. But Ethereum got a major upgrade, and we saw the birth of major blockchains like Base and Mantle, to name but a few. As for this year, Bitcoin has finally got spot ETFs in the US, a new all-time high, and more political consideration than ever before. So then, what gives? Is it because NFTs have gone quiet? Maybe we need more JPEGs of perplexed gorillas to keep our VC friends interested. Anyhow, the authors of the report explain the real reason, or at least part of it. Essentially, it all comes down to Bitcoin stealing the overall narrative, if you ignore meme coins and a handful of alt layer 1s, that is. As a result, BTC has outperformed pretty much every narrative that dominated the last cycle. Everything from DeFi to NFTs to gaming has been left in the dust. If the authors are right on this, then what this means is that VCs are likely waiting for the next big narrative before laying down their enormous stacks of cash. And if you want to beat them to the punch, you'll need to determine which narratives will be the next big thing. Of course, figuring that out is easier said than done. Thankfully though, we have a few videos about this, both here on the main channel and over on our recently rebranded second channel, More Coin Bureau. We'll leave a few links in the description for you to check out after this video. And by the way, if you're enjoying this video so far, go ahead and give that like button a tap. It really helps us out. And if you'd like to see more content like this, subscribe to the channel and turn on those notifications so you don't miss our next one.
Hello, it's me, guys, Cousin Barry. I'm very sorry to be interrupting this no doubt fascinating video, but I want to tell you about the Coin Bureau deals page, so listen up and listen well. Alright, this is the place where you will find all the amazing promos and discounts what you, as Coin Bureau viewers, are entitled to. So don't be a mug, go and check it out using the link below. You'll find discounts on hardware wallets, you'll find exchange sign-up bonuses, some of which are absolutely bleeding mental, and you will find trading fee discounts there as well as a whole load of other goodies too. And let me tell you, old Barrington here, he's had to hammer the dog and bone all bleeding day and night to get you these promos and discounts. So you're welcome, thank you very much, go and have a look, pronto. or I have to come and have a word. All right.
Okay. In the next part of the report, the authors look at how much money VCs invest based on what stage a project is at. They highlight that in Q3 this year, 85% of venture capital went to early stage projects, and the remaining 15% went to later stage projects. They also point out that there might still be some dry powder kicking about from the last cycle, and that many project leaders will still have the resources needed to source new deals. While it isn't mentioned in the report, something interesting can be seen in the chart provided. As you can hopefully see, the orange part of the bars on the chart represent investment in early stage project, and the purple part represents the investments in later stage projects. But what you'll notice is that since Q2 last year, the purple bit is shrinking and the orange bit is growing. Now, this could be suggesting that those VCs who've weathered the storm with us have been on the lookout for the next big thing, and the shift towards early stage projects suggests they might have found it. When it comes to the deals being made, the focus here is on projects that are in their pre-seed fundraising stage. That's simply because these will most likely be the projects that bring the most innovation and could potentially reshape the space. As the authors put it, quote, "The share of pre-seed deals declines slightly, though remains healthy relative to prior cycles." Again, though, you can see on the chart provided that the amount of pre-seed deals has seen an uptick since Q2, which makes you wonder if this could be the start of something much bigger. But, well, maybe we're just being optimistic. Now, the authors then look at the valuations of VC-backed cryptos, and this is where things don't look so optimistic. That's because valuations dropped in a big way throughout 2023, which makes sense when you remember that the market was so dry last year that it often felt like a desert. By Q4 of 2023, VC-backed crypto valuations had hit their lowest levels since Q4 of 2020. However, the report's authors also point out that valuations and deal sizes have bounced back a bit since Q2 of this year, which aligns with BTC's all-time high back in March. Since then, valuations have hit similar levels to what we saw in 2022. What's interesting, though, is that VC funding going into crypto appears to be correlated with VC funding on a broader scale, and the fact that crypto has rebounded more sharply suggests that VCs are shifting more of their focus towards the crypto industry. Now, the next part of the report looks at which crypto categories received the most VC funding in Q3. Unsurprisingly, the largest portion went to what Galaxy labels as, quote, trading, exchange, investing and lending, with over $460 million of VC funds. Now, we say unsurprisingly because this basically means centralized exchanges, which continue to generate incredible amounts of trading revenue and continue growing regardless of which cryptos are pumping. So long as something's pumping, they're making money. On that note, Layer 1 cryptos came in a close second place with just under $450 million, and in third place was pretty much all of the leading narratives from the last cycle, those being Web3, NFTs, DAOs, metaverse and gaming. This bracket got around $350 million in VC funding, although it's worth keeping in mind that it's the only bracket with a bunch of unrelated narratives all bundled together. Now, this could be to simply highlight the investment in last cycle's big winners, or it could be to make the numbers look good for any VCs reading this report. Recall that Galaxy is a leading platform for VC investors after all. Skepticism aside, though, the authors then provide a chart that shows the share of VC capital flowing into each crypto category. But honestly, this chart is a bit of an eyesore. I mean, it kind of looks like those sand art kits you'd buy for your niece or nephew's birthday specifically to annoy their parents. Thankfully, though, the authors explain what's going on here. They write that since Q2, AI services have seen a 5x growth in crypto VC funding. That's an insane difference in just a few months and suggests that VCs are ready to jump on the AI hype. Say, did you see Elon Musk's recent unveiling of Tesla's Optimus robots? Probably nothing. Meanwhile, VC investment in that trading, exchange, investing and lending bracket has grown by 50%, along with Layer 1s. Meanwhile, the last cycle's big winners have actually seen a 39% reduction, which is notably more than any other category. They came, they saw, they conquered, they faded. The authors go on to say that Layer 1s got the largest investment share in Q3 at 13%, totaling $341 million. Crypto exchanges got the second highest share at $265 million, and infrastructure projects came in third with $258 million. However, when it comes to deal counts, this paints a slightly different picture. Last cycle's winners had 120 deals in Q3, which accounts for 25% of the total deals made, making it the leader by quite a wide margin. What's crazy, though, is that this is a whopping 30% increase since Q2. Recall that last cycle's winners were Web3, NFTs, DAOs, metaverse, and gaming. Could this be foreshadowing a boom in these crypto sectors? Well, if you've been keeping up with the hype of games like Off the Grid, then you'll know this could very well be the case. Full disclosure, by the way, Coin Bureau is invested in Off the Grid, but the point still stands. Anyway, infrastructure projects came in second place in terms of deals made, with 79 deals, or 16% of the share, an increase of 12% since Q2. Trading, exchange, investing, and lending platforms came in third place with 55 deals, or 11% of the total. Meanwhile, crypto projects focusing on media and education had the largest decrease in deals at a staggering 73%. Ouch. The authors then give us another lovely bit of sand art, and thankfully provide some context underneath. They explain that in Q3, crypto infrastructure had 64 deals made, gaming had 48, and DeFi had 38. Next, they break down the investments made by stage and category. In their words, quote, "This gives a clearer picture of what types of companies in each category are raising funds. Essentially, layer 1 cryptos, enterprise blockchains, which are basically blockchains built to streamline real-world businesses, and DeFi projects saw the most early-stage investment, whereas crypto mining businesses got their investment at a later stage." Okay, the next part of the report looks at investment by geographic location. Unsurprisingly, the largest number of VC deals took place in the US, with a whopping 43% of the total. Singapore trailed far behind in second place with just 8% of the deal share, followed by the UK with 6%, the UAE with 3%, and Switzerland with 3%. The US also had the lion's share of VC investment amount at 56%, whereas the UK had 11%, Singapore had 7%, and Hong Kong had 4%. What's intriguing is that most venture capital funding went towards projects founded in 2021, but most VC deals took place with projects launched in 2022. Now, this could simply be because VCs were throwing their money into projects amidst the mania of the 2021 bull run and opted for token allocation deals when the market cooled off the following year, although admittedly, this is just speculation on our part. And in the final part of the report, the authors took a look at venture fundraising, which, as they explain, continues to be a sticking point. They say that the reasons why VCs haven't been as involved in crypto as they were in the previous 2 years is for several reasons, both macro and crypto-specific. On a macro level, the authors explained that crypto investors have been expecting interest rates to fall since the start of the year, but as you'll know, this only recently materialized. The authors also say that the past 2 years in crypto have basically been a bit of a turn-off, and to be fair, it ain't hard to see why. What's worse, though, is that according to the authors, quote, 2024 is shaping up to be the weakest year for crypto VC fundraising since 2020. As you can see from the chart provided, this puts us way off where we were in the last bull market. And as if that wasn't scary enough, the average fund size in Q3 this year has reached its lowest level since 2017. All right, and with that, we've reached the end of Galaxy's report, and we'll remind you that we've left a link to it in the description if you want to take a peek at it yourself. So then, this leaves just one all-important question. What does all of this mean for crypto? Well, something that stands out is just how much dominance the US has maintained over the rest of the world in terms of venture capital interest. This is despite the fact that the regulatory backdrop in the US makes it difficult for crypto projects to even start there. This is why many entrepreneurs have started moving overseas, launching their projects in more crypto-friendly countries like Switzerland, the UAE, or Singapore, to name but a few. What this means is that while the US is still dominating by a wide margin, time is running out. US regulators will need to act quickly and carefully if they want to prevent more of this innovation from moving overseas. By that, we mean that they need to start providing more regulatory clarity, something that only seems possible if there are serious changes to the status quo. Anyway, aside from the overwhelming VC interest in the US, The other standout is that venture capitalists just don't seem to be engaged, for reasons we've discussed throughout this video. This obviously paints a rather bleak picture in the short term because VCs have played such a key role in the growth of the crypto industry. But as you'll know, it's not just VCs that have been missing. At the other end of the spectrum are retail investors who have yet to return en masse. But this is why, despite the bearish nature of this report, we see all this as bullish. It sounds crazy until you realize that just like retail investors, venture capital investors will return at some point. And best of all, this could happen sooner than you might think. Take a second to consider that a lot of the recent activity in crypto has been with meme coins. As you can imagine, meme coins are virtually impossible for VCs to engage with due to their inherent risks. But now that the meme coin hype may be fading, some VCs could begin feeling comfortable enough to follow the next narrative, which won't have the same level of risk. Hopefully anyway. At that point, people will start to take notice, particularly retail investors who have been on the fence. It'll only be a matter of time until the FOMO kicks in and retail investors start pushing crypto to new all-time highs. The good news is that just by sticking around, you've already positioned yourself to take full advantage. So, give yourselves a pat on the back, folks. Your patience and belief in crypto means that you've successfully front-run trillions of dollars worth of investment. Okay, and that just about wraps up today's video. So if you enjoyed it, you know what to do. Hit those like, subscribe, and notification buttons. Like I say, it really helps us out and you'll be first in line to see our next video. Don't forget to check out the description for links to everything else we have to offer. Not only do we have that amazing deals page with up to 70% off trading fees and up to $100,000 in sign-up bonuses, but you'll also find links to our other channels, our merch store, and even our community Discord. Why not sign up and say hello? Looking forward to seeing you there. In the meantime, this is Guy, over and out.